Breaking Down the Law is sponsored by Battle-Born Injury Lawyers.
Robinhood, the stock trading app partly behind the Gamestop frenzy, is running a 30-second Super Bowl ad on Sunday. The tagline, "We are all investors."
Don't think you're an investor? We make investments morning, noon, and wait, what time is it exactly? We make short-term investments, long-term investments. We diversify our interests, realize our gains and losses, and try to keep the big picture in mind. You don't need to become an investor. You were born one. Robinhood.
Well, these investors coordinated their trades over internet forums like Reddit, and as a result, some stocks like GameStop soared. Hedge funds lost millions. Robinhood then stopped trading all stocks last week. That got the attention of lawmakers in the SEC. Attorney Matt Hoffmann with Battle-Born Injury Lawyers breaking down exactly what happened, what's ahead, and Matt, if it's legal.
Well, I mean, the short answer is yes. It's legal what the investors did. So, you keep seeing headlines, it's Robinhood, GameStop. So just simplistically, so for everyone to be on the same page, Robinhood is a brokerage service. So it's just like E-Trade. Mm-hmm. The big difference with Robinhood is there's no commission fees per trade. You can trade as many times as you want. There's no charge for it. And so it really encourages day trading. And, people can trade every 10 minutes of a stock, and people try to time it, things like that. So, what happened is you had these internet forums like Reddit, and people all got together and they picked all these stocks that are just beaten up. So they picked GameStop, AMC Theaters, Blackberry, things like that, because they can get the shares for cheap. Right. So they're getting it for $4 or $5 a share, and they all get on there and say, okay, and it is, I mean, they conspired, but they conspired to raise the price,
make it better,
to make it better. And the purpose behind it was, let's make the stock a lot higher on these stocks because we're going to stick it to the hedge funds, and because the hedge funds had taken short positions, and they did it, and a lot of people made money from it, and the hedge funds did not. So legally speaking, is it legal? Yeah, absolutely, because what we usually see is these pump and dump schemes where a small group of people with a ton of money get a share at a really good price and then spread false information so that average investors start buying the stock, and then they get their golden parachute and they get out. That's securities fraud. That's, people can go to jail for that. But what was done here is like the complete opposite.
Yeah, because they were trying to improve something, but then you have all these hedge funds, Matt, who essentially they lost a lot of money and they're playing with someone else's money, whereas Robinhood, you're playing with your own money. It's your own decision.
Yeah, and that's, I mean, I've heard a lot of people try to explain this short position thing. I'll try to do it in a simplistic way.
Good luck.
So what happens is, let's say you're a hedge fund. You go to a brokerage and you say, hey, give me 100,000 shares of GameStop. It's currently at $20, and we'll give you the 100,000 shares back in 6 months, and during that time we'll pay you 2% interest. The brokerage says, fine, take it. The hedge fund then sells those 100,000 shares for $2 million, and then they use the $2 million for whatever they want. And their goal is, in 6 months, when they pay back the 100,000 shares, it's only going to cost them $5, $10 per share. So they had free use of the money and they made money. And so, you borrowed at $20 a share, and then you give it back at $10 a share because you can go get it on the open market. Hey, you made $1 million. Good job. Well, what happened here is, like, you borrowed it at $20, and then all of a sudden it's at 300. And because of that percentage, it throws everything off, and you have to get out of the short position by law. So they're just forced to go out there and pay $300 a share, for like $30 million for something they paid $2 million for. And so they just lost all kinds of money. And, the sad thing in this is these hedge funds, they don't just get their capital by magic. The biggest investors in hedge funds are pensions, teachers' pensions, state of California, state of Michigan, firemen pensions, police pensions. So, these Robinhood guys, good job, you got the hedge fund, but I mean, that could trickle down to some real people.
Right.
And it's going to be interesting. it's going to be, I think that's where you're going to see action.
And I think that is important because it is real people behind all of these dollars and these stocks. Matt, I wish we had more time because I know there's a lot to this. It's very tricky, but you did a great job kind of making it nice and easy for folks to understand what's happening. And I guess we'll just wait and see what the ramifications are down the road. But again, thank you for breaking it down.
Expect an overreaction. That's what always happens.
Okay, well, there we've heard it from the expert. Matt Hoffmann, as always, we appreciate your time today. Thank you.
Okay.